Good morning and welcome to a new podcast from IG, Talking Shop, where it says as exactly what it says on the tin. We, a room of account managers here at IG, we're going to talk a little bit of shop, market musings, stories from across the desk over the last week or so, things that we think are worth saying and things that we think clients think are worth saying. We're going to attempt to provide some valuable insight and help you cut through the noise. We are here to do that for you. So, without further ado, I'd like to introduce my co-host. I'm Luke Moore. I've been with IG for around 11 years, and I'm joined by Sara and Pete. Sara, how are you?
Good, Luke. How you doing?
Fantastic. Pete?
Yeah, I'm good. Thanks. All good. How are you?
Good. Yeah, I'm really good. Look, between us, we've got about 30 years worth of experience trading and working with IG. And I think it's worth explaining to the listeners a little bit about how this podcast came about. So why are we here?
We're actually here because of Sean, who's not here. Sean should be here, by the way.
Sean should be here. Sean is not here.
Yeah,
That's
so
all.
It was an idea.
Yeah, we collectively discussed stuff. We're quite loud on the desk. I think people generally thought, oh, maybe they'll stick them all together and some magic might happen. So we're here to see if we can conjure that. But yeah, I mean, we talk shop all day long, don't we? We say, you know, seeing this, seeing that. We've all got an opinion. So we thought, yeah, let's get it together and basically share our opinions and just sort of chat it out.
Yeah, look, and in line with that, each episode is going to be centered around one particular topic. This week, the topic is, drumroll, the UK budget. So Rachel Reeves announced on the 1st of August that we are going to be laying out her plans. Sorry, she is going to be laying out her plans on Wednesday, the 30th of October. Anything else happening around that time of year that you can remember?
Halloween.
Yeah.
Will she spook the markets?
Very nice. Yeah. There's a lot of, I guess, fear out there that she might potentially do some fairly radical things with regards to taxation, which I guess could have, you know, huge knock-on effects in people's everyday lives. But yeah, I mean, the big one, I guess, is capital gains. But there are other things that she's been discussing.
Can I just say, on the thought of Halloween, I was thinking about her the other day. And I was like, I recognise her. She looks like somebody. I'm like, who is it? She looks like the head witch in Royal Dahl from The Witches, the OG 1990s film. No?
Strong.
No one else?
Yeah, strong character assassination. I was thinking Noel Fielding, but yeah.
Just in line with Halloween, what does the Wicked Witch have to say?
Well, we're going to find out in just a couple of weeks. So what's been said so far, we're going to get to the main event, the main topic of what we're here to discuss. So day one, Labour walked in, and after running a campaign with Keir Starmer saying there's going to be no more tax raises, they walked through the front door and she said that there's a 22 billion hole in our finances.
She also said, oh, it's a really difficult job I've got. Yeah, you're paid 150 grand a year. So
yeah, that is the job.
Yeah.
Yeah. So we're expecting to see what she says, ways to address it. I mean, in my opinion, I don't know about you guys, it doesn't feel like they've inherited an economy that's particularly bad, right? We've come off the back of an inflation spike that seemingly is coming down. We've got the Bank of England now looking at lowering interest rates. Clients are looking at the US, who are now lowering rates. We saw 50 basis points come out of the Fed a couple of weeks back, and we're now looking at the Bank of England due to follow suit fairly soon.
Well, it's interesting you say that, because Reeves has been talking down the economy, right? And what we had, I don't know if you remember, but we had economic growth forecasts revised up sharply by the OECD ahead of this budget. They went from 0.4% to 1.1% for 2024. And that was the biggest upgrade of any G7 country. You then looked at 2025, where they'd gone from up to 1.2% versus the 1% prediction back in May. And she's still kind of talking it down. So
they're talking it down like they inherited an awful book of business, basically, weren't they? They were saying, oh, this is all legacy from the previous government. When realistically, obviously, they were sort of navigating kind of what you call unprecedented times with the back of COVID. And now they're starting to see the benefit, I guess, of those changes that they put in place, which obviously now the current government will probably say, oh, we've had this huge revised forecast because we're so great and we've taken over.
Yeah,
so
exactly.
if it's good, they'll say it was them, and if it was bad, they'll say it was what they inherited. But
a good forecast gives her more room to manoeuvre in this budget, right? And I think what people are going to be looking at, the real test is the OBR forecast. And whilst 2024, the OECD is higher than it, it's actually lower than the 2025 1.9% that the OBR is predicting. So I'd be really keen to see what they say. She gets, I think, 2 to 3 weeks before the budget, she'll get the pre-measures fiscal forecast from the OBR. And I guess, you want to look at, is there an upgrade to growth in that? And if there is, what's the play? Sterling rally, potentially. I think that a good way, a lot of people always think, sterling rally, what pair should I look at? I look at cable. But dollar strength at the moment, I actually don't think that's necessarily the best play. I'd probably be more keen to look at something like euro sterling. And actually, especially even when you look at what's going on in the wider world this week, if you look at the euro and you look at what's happening with oil and with China and demand there, and you look at what's happening in the Middle East, if you suddenly see oil rally to, we hit 81 top, you go to 85, 87, 90, something like that, and Europe gets screwed, let's face it. You know what I mean? And so as a nice play, if you're looking at two completely different topics, but to merge into one, euro sterling for me has got to be it.
Yeah, that's an interesting one to think about. I mean, the budget itself, will sterling rally on the back of what she says? I don't know. I mean, for me, it feels like the sterling dollar trade is more heavily influenced by what's going on with the Fed than what's going on over here. Bailey last week came out saying we need to be more potentially more aggressive with our rate reduction plan, which obviously sent the pound down from sort of 134 tops down to sort of 130 now. I think we are testing the 50-day moving average. And it's been quite nicely in that range at the moment. But it's I don't know whether we're going to see a huge amount of sterling strength on the back of it. But yeah, it's definitely an interesting one to look at, like you say, euro sterling, as opposed to just looking at cable. There are other ways of sort of attacking it.
From a broking perspective, on the platform you can trade sterling euro or euro sterling. Sterling euro may be a little bit easier for us to understand because the pound is the first currency. However, the spread is a little bit wider. The number is higher, so on a relative basis, is there a huge amount of difference? Probably not. But euro sterling is definitely the way that people
the traditional FX pair is euro sterling, isn't it? But obviously, if you go to the Travel X and you go on a holiday, people look at it and what do you get for your pound against your euros? And we do obviously quote it as both. But yeah, typically it's euro sterling the way to attack it in a more efficient way, spread wise.
Well, I also have a look at, it's really easy, I think, for people to come into the budget and think FTSE 100. But you have to remember, a sterling rally is going to put a lid on any FTSE move.
Yeah.
And so I'd also look at something like the FTSE 250, which really does need a bit of a kick up the tushy anyway.
Yeah.
And again, this budget could be where you find that opportunity.
That's a nice idea, actually. I like that. Because, everyone always sort of goes, pound's rallying. That means FTSE's going to go through the roof. Well, actually, no, it's not. It means FTSE's going to be pretty much capped.
Yeah.
Because, 70% of the companies are earning in dollars. Looking at the wider market, like you say, 250, AIM, etc., is actually a really interesting play, and the opportunities in that market probably larger, and the moves you get in those markets can be wild trading the 250.
And it's up since August 1st. You look at the FTSE 250; it is higher than
it's just
where we were on the
though,
FTSE 250.
Luke. It still needs a rocket shoved up it. Seriously,
Can't agree with you more. But if you look at since they've started talking about the budget, you've got to look at where the markets were before the 1st of August and where they are now, right?
Yeah,
that's been the whole play, the whole rhetoric, and it is a little bit higher. Same too with cable. We were 127 before, and now we're off at the peak.
Yeah.
We're now trading 130. So the markets are clearly appreciating.
But this is what's hard, right? The rhetoric. And that's the problem with the budget, is a lot of what eventually materialises is already leaked to the press. There's already so much that we know. What do we know, Luke, already that's come out?
Well, let's move along. Let's talk about specifics that we do know that are going to come up. So capital gains tax, inheritance tax, all these different things, we are kind of selling the headlines on what's going to move the dial on this 22 billion hole. But I think what's interesting is from a market's perspective, we want to look at stocks, we want to look at sectors that are actually worth trading. So we've got the alcohol levy is potentially looking to change. So we're looking at pubs, we're going to talk about that. Oil and gas is huge in our space. So the small cap equity market, it's a market that clients love to have, whether that's on their trading account, whether that's on their investment account through their ISA. So we're going to take a little look at that. Naturally, Capital gains tax is something we're going to take a little look at, but other things that have been mentioned is the winter fuel tax. No one wants to make sure that the elderly are not getting their winter fuel allowances, but infrastructure spending, are the big projects that have been kind of thrown around by the Conservative government over the past 3 years, are they going to get funded? Finally, what do we talk about in terms of house builders and then investment accounts, brokerage platforms like ours? How does that work? So I think if we're going to kick off the first kind of big topic, let's talk about tax, because that seems to be what everybody's talking about.
It's easy for her, right? Tax. That's my biggest problem, I think, with this current government is you're looking at redistributing wealth instead of wealth creation. And that really bothers me when you look at economic growth forecasts. Mm-hmm. But at the end of the day, she's got to find 22 billion quid from somewhere. And the easy way to go is, let's up tax. I mean, one of the first things I've seen rumoured to be on the cards is dividend tax. So I don't know if you remember, we've already seen dividend allowance get absolutely smashed. Back in 2018, you had a $5,000 dividend allowance. That's now only 500 quid. Mm-hmm. That could go 250 maybe on the cards.
They could scrap it completely. Yeah.
They could scrap it completely. And keep in mind that the HMRC is expected to collect £18 billion from dividend tax in the current year. So do they raise the dividend tax itself? I don't think so. It's pretty tricky. I think the additional rate of tax is already 39.35%. It's pretty close to the higher rate of income tax anyway. But if you're looking at that side of the tax, and it kind of links in quite nicely to what you said about the investment platforms, which I think all of the tax changes will link into. You're looking at your AJ Bells, you're looking at your Janice Hendersons, you're looking at Man Group. Hargreaves Lansdown, I don't know, will they still be listed by the budget after the takeover?
Don't know.
Well, at the time of recording this, we're recording this on Wednesday the 9th. There was some Swiss allowances made. So they were given the approval by FINRA over in Switzerland about that deal. I think the FCA and I believe someone else is still yet to sign off on it. So we don't know on that one.
Just don't know if they'll still be listed. What else have we got in the
So look, in terms of tax, the two big ones that I've pointed out, or I'd like to point out, is in politics, and this is less so maybe about markets, but in politics, you can run and you can sell headlines if you create an us and a them mentality. And so when you look at capital gains tax, those that are in the markets, those that are investing, capital gains tax is important. Those that own property that are looking to sell, capital gains tax is important. I would say that you can very easily create to borrow the US phrase, you can create a Main Street versus Wall Street type of mentality, right? Those that have and those that have not. And so that is easier for them to pull those triggers. You've got a left-leaning Labour government. We know that. So they've got a redistribution mentality. So we know that it's going to be easy for them to push it. Looking at last year's tax receipts, though, 829 billion brought in 23-24. Capital gains tax is estimated to have brought in 14.5 billion.
Yeah.
That's what? How, as a percentage? 2%, 3% of the overall allowances. Now, that doesn't feel like it's going to particularly move the dial. But what they're talking about is they're looking at moving the capital gains tax rate itself to the same as income tax. They're even removing relief on the first £3,000 of any capital gains that you bring in. Look,
I've had clients call about this already, by the way. Quite a few people have been ringing me saying, what are the avenues? What are my options? Because it will affect your high rate of earners, your CGT going from 20% to say 45%.
Yeah, no, it's massive.
It's an aggressive change, and people are starting to look at their options on the table.
Absolutely, and I guess our product base has become more attractive on the back of this potential change. If they align CGT with higher rate income tax or change dividend treatment, then all of a sudden what we offer on the sort of leverage spread betting side does become more attractive.
Yeah, absolutely. You've got a tax-free product. And you're also looking at it at the same time. Yes, it's a leverage product, but you're looking at it at a time where interest rates are coming down.
Yeah.
You create the perfect storm for bringing in. Now that, caveat with that she doesn't touch the gambling sector.
Yeah, of course. Yeah, that's always the caveat. But I guess the interesting thing, which I've discussed with a few of my clients, is on the one hand, you've got, you could do the tax-free spread betting products where you do obviously leverage your position. You've got to finance that leverage, which means you've got an ongoing cost. It'll cost you about 7.5-8% per year to stand still. So you need a stock that's going to actually move and also pay you a decent dividend yield. But something one of my clients said, which is actually quite smart, was you can also go short with our product. So you could create a long-short book where you're maybe very bullish some equities, but you're also bearish on other equities. So you could be, long on, speculative exploration miners, but you could be short, pharma, in which case you go short your pharma stocks, you receive the interest on a monthly basis, which offsets what you're going to have to pay on the long, on the other side. So you've got like a long short book, you kind of, you're paying some overnight fees to have the leverage, but your gains, hopefully, your gains are going to be tax free. I guess the other side of that coin is with capital gains and traditional investing through share dealing or CFDs. If you have a particularly bad year, you can offset some of your capital gains. Now, you can't have your cake and eat it with spread betting. So if you make money, great. If you don't, you can't offset your losses like you can with CGT. So it's an interesting
like to be
one.
In the market to make money.
Of course, yeah. We put it on the stats. There were 67% of clients or retail clients lose money. We have to put it on the website, right? And our client base, certainly the ones we look after, want to be in that top 33%, and they want to try and continue to be in there and make money in a controlled manner, which is sustainable. But it's become more and more relevant now as we get closer to the budget. Now, one thing that my different clients said to me, which was really interesting, was sometimes the government put little things out there ahead of the budget in the media just to create a reaction. And I think the little tidbits of, they're going to up capital gains, they're going to up capital gains to this, they're going to put it up to this level, they're going to put it to this, is enough to make people start realising gains ahead of the budget on the proviso that they will change it. But if they don't actually change anything, then they've already got a huge amount of revenue that's come in just through pure speculation that they might do something. So, I mean, great tactic if they have.
It's a great tactic if they have. I've not seen that.
I've heard it and I've seen it from other clients as well. But you know what? I see where you're coming from, and I think it's an interesting play. But I think she's going to go for it. She needs to get money from somewhere. True. She's got a big pot to fill, and everyone wants a piece of her pie.
They don't want to do income tax. Inheritance tax is a lever they can pull. CGT is a lever they can pull. But you keep pulling these things. Sooner or later, you end up with.
She wants to tax schools, kids' education. She's looking at going after private schools. Although I think I did read that recently she's dialed back a bit on the 20% VAT. And I don't know if she's going to go as aggressive, but the public school sector, the state school sector, already under a huge amount of pressure and limited resources. Mm-hmm. And now you're going to see more and more kids need to move to those schools. It becomes unaffordable. You price people out of the market. I think you'll see a number of private schools go under.
Yeah.
The
thing that really frustrates me, I suppose, when I think about these sorts of things, is that you're still paying. If you were paying your school fees, you're still paying that with taxed money already, right? So you've already paid your tax on your money to pay for the school fees, and then to pay the VAT on top of that. It's just like it just feels you like you say you're trying to fix one problem, but realistically you're kicking a load more people into another problem, which is overcrowding already.
Again, it plays into this Main Street versus Wall Street mentality as well. It's an easy headline to sell. It was a good political headline from them, and it clearly worked. They got into power.
Did it work though? There was a poll put out in the FT, I think, yesterday about, we always say, this Labour government, and it had this landslide victory and one of the biggest victories in history. And now they're saying that actually they're only one point ahead or 1% ahead in the polls. So I think it was.
Yeah, they've done well to get rid of that majority in such a short space of time.
Surely that's a record.
Yeah.
Liz Truss and her cabbage. Well, this must be a record.
Liz Truss and her cabbage.
Yeah, they had the decaying cabbage versus how long she'll stay in government.
Was it a cabbage or a lettuce?
One of the two. But
she'll go down in history. But this must also be a record of how quickly you can your loyal legion of followers.
Well, that's it. Yeah, they've done a lot of things which have been fairly unpalatable, I think,
so what else
in a short space of time.
Let's move along. There are two other taxes that I want to just kind of touch on here. The second is the windfall tax. My family in law are all based up in the northeast coast of Scotland, and so anything going on in the North Sea up there is mega important. We already know that they are not going to give any new licenses to any oil drillers, and as we've seen kind of increasingly now across the industry, if Trump gets in, they're going to continue to drill and oil will be plentiful. We seem to be the only country that is happy to denationalise our own oil reserves. So look, on the subject of that, the windfall tax, or what is being called the energy profits levy, it's being speculated that the EPL rate, the energy profits levy, is going to increase from 35 to 38%, which will raise the effective tax rate for upstream oil and gas activities, get this, to 78%. So if you're in that upstream oil and gas area, you've got to pay an effective rate of 78% tax.
Which is why I've probably seen Shell, BP, all those stocks just,
dump.
Yeah,
Massively
basically dump. Yeah.
So you've got
on the back of what? Strengthening oil price. So if you're an investor, you'd be scratching your head going, hang on, I'm supposed to be holding something that's meant to be going up at the moment. And realistically, you can go, well, yeah, look at what's coming down the pipe.
Well, think about it, right? Who are the biggest operators in the North Sea? BP, Shell, Equinor, they're not trading in London, and Harbour Energy. Harbour Energy that spun out of Tullow all those years ago.
Yeah.
Harbour is down 20% since the start of August. It's bounced off the lows, so clearly recent tensions has given the oil price a bit of a boost. Shell are down 17% since August the 1st, and BP are down 17%. So what does that tell you?
I don't think they'll get the infrastructure spending that they need either, even though she's turned around and said that she's going to pledge more money to invest and grow the economy. At the moment, I think you've got infrastructure spending expected to be 700 to 775 billion over the next 10 years, with 164 billion to be spent by the end of 25. And energy and transport are said to get the largest share of that, right? But in the background, she's saying one thing, we've got to go and invest and spend more. But actually, on the flip side, the Treasury's already asked ministers to draw up billions of pounds of cuts. I think they've asked them to model investment plans of up to 10% of their annual capital spending as part of this month's spending review. So I think they're both interesting. You've got to look at your tax side of it versus your infrastructure. I've not seen too much more leaked about it in the news. Infrastructure, what's the play?
I was just about to look at that. Who are you looking at?
Babcock's, BAE's, Balfour's.
BAE, Balfour. I mean, they're already kicking those decisions down the road a little bit. So close to my heart, I'm from the north coast of Kent. And for those that don't know, it's been speculated that the Lower Thames Crossing is going to go in. They're going to drill a tunnel from North Kent into Essex to try and direct traffic away from the Dartford Bridge, which in fairness, it probably needs it. But
do you know what? That would help. I have to go through that bridge to see my mother-in-law, and it's such a pain.
I also don't particularly want a tunnel moving within 100 metres of my house. So they're struggling with that. But that decision's already being kicked into the spring of next year. Balfour BT, the biggest players on that. Looking at Balfour BT, UBS and Jefferies have maintained their buy ratings on it recently, and the stock is doing okay. So the market's decided that Balfour BT is potentially one to look at. Babcock potentially. Do you know who are the big projectors on HS2? Is that being tinned now? Is HS2 going ahead or not? Is that on the cutting board?
I don't know. I saw a program on it a couple of weeks ago. I mean, that was just such a monumental mess.
I think you said the program was riveting.
The program was pretty interesting. I mean, the amount of things that they've made already, right? I think it has to continue to go ahead.
Do something with it.
Because they've just buried so much cash into it. But I don't know what the plan is with that. But I mean, with regards to like house building and all the rest of it, both Labour and the Conservatives, when they were going for the election, they both sort of pledged similar amounts of new housing. So you wouldn't have thought there'd be too many surprises with regards to the budget and what they're going to plan to do and roll out. I mean, yesterday, obviously, we had that news with Vistry, which used to be Bovis Homes, tanked 35% on a pretty large miss. They've been downgraded this morning by UBS to £8.80. It doesn't look great.
No, and look, it's easy for them to say they're pro-housing, but at the end of the day, if this is a tough budget, are people really going to want to take on more debt and such expensive mortgages? I find that hard to believe.
The thing I always find fascinating about that Vistry story is they've come out this morning, whether it's officially or just through comments, saying that they've reviewed their portfolio and they're happy with where it is. It's like, well, the share price wasn't particularly happy with where you were at the back end of last week compared to where it is now. So
and you can't review 300 properties in 2 minutes. But I mean, it's to calm the markets. But it leads to more questions, doesn't it? Who's doing the review? The person that did the numbers.
and who reviews the reviewers?
Yeah, exactly. Not great.
The other thing that is worth talking about is the alcohol tax. Pubs.
Hang on. Just before we get into the tax on it, we all like an after-work beverage. And they're doing this. Have you seen the half pints, the mini glasses?
Are
No.
they selling them for the same price?
Half pint's been around for a while, sir.
No, you can buy one, but now they're going to make that the standard. You're not going to be able to buy pint size.
Rich,
So
who does
first
the
of all,
TV show, he was talking about this.
Yeah.
He was saying this was never going to fly.
this is that.
It's basically like it's the Aussie version of the schooner.
Yeah.
The schooner.
Two-third glass.
Look, I understand they want to, tackle it for the NHS and for health reasons, but now you've got just longer queues in bars because people need to go up more often
it's not
to buy
NHS.
drinks.
It's a stealth tax. It'll still be the same price as a pint.
Yeah,
It's like when you used to get your bag of crisps, 35 grams in. Now it's 25 and no one told you.
Shrinkflation.
I'm aware of these things.
now you've got to carry around 2 little pint glasses. You're not allowed to. They want to ban smoking,
Yeah.
which I know is controversial to say, but
Yeah.
I'm not.
For the
not on board with
record, Sarah is quite heavily pregnant.
Not now, but when I return.
Yeah, when you return,
I'd like the option to be available. I don't need a government.
Well, it's nice
that
to have some
tells me,
freedoms.
what to do and when and how.
But yeah,
to
they're
do
talking about an alcohol tax. They're talking a 5% drop in alcohol duty, I think, which would have a knock-on effect of an extra 12,000 jobs that the industry could afford to effectively to create.
Great, more people to serve the extra pints you're going to have.
Well,
to
that's
get.
it. You're going to have to get to
And
the
queue at the
bar.
bar.
But what do you see happen? JD Wetherspoons affected, Youngs, Green King, those sorts of names. I think you want to have a look at. With the budget as ever, and then obviously the alcohol kind of produces the Diageos of this world. All that sort of stuff. But yeah, pubs is always an interesting one for the budget. And
It's just morale of the country.
Yeah,
I mean,
of
how
course.
else do you don't have many voters left for the lead. You can't drive more away.
Well, that's it.
So
yeah.
maybe a cut is on the cards just to kind of boost.
Maybe the clue will be in what she's
positivity.
drinking, because they do the whole what's the chancellor
yeah.
going to drink during the budget, because you can drink apparently like whatever you want.
can drink
Gladstone used to
anything you
drink,
want.
What was it, port or something?
Yeah, we'll go on then.
And like a raw egg, was it?
So I looked into this, well teed up, I would say. So you are allowed to drink an alcoholic beverage when the Chancellor delivers their budget. So I haven't yet seen a bookies market, but I'm sure, Pete, you can make one for me. Ken Clarke was the last Chancellor. He opted for a straight whiskey. Before that, it was Gladstone, and that's before.
It's a
my
long
age.
time before that.
It was a long time before that. I'm trying to wrap my brains around that. So yeah, apparently he enjoyed a sherry with a beaten egg.
Yeah.
Which
Who
is
doesn't?
Not my first choice. On the subject of that, go on, a quick question for you. What's technically the biggest coffee shop? If you look at coffee volumes sold in the UK, what's the biggest coffee shop in the UK?
Costa. Whitbread.
Keep
Which
going.
Costa. No, I'm wrong.
You're wrong.
Right.
So,
Cafe Nero.
No, surely not up and down the country.
Spoons.
Really?
Really?
Wetherspoons. Wetherspoons sells the most amount of coffee in the country,
Monster.
which is incredible when
Yeah.
you think about it as a pub.
Are
I think
they
also-
open for like
Yeah,
early
brekkie.
coffee?
I'm pretty
morning?
sure.
Yeah, coffee, brekkie, pints. The whole lot. They do the works. I think you can still get 2 doubles and a mix there for £5. Pretty strong.
Oh, what, the old pictures of Woo Woo.
Yeah.
Really
It's a
well
crazy place. No frills, but it works.
It works really well. I mean, they can keep it cheap because they do so much volume.
Yeah.
They're also apparently one of the most popular restaurants in the country. When you look at meals served,
Surely
Yeah.
not.
Yeah.
you just need to buy Wetherspoons. Well, no, that's not a trade recommendation. If for the eagle-eyed out there, if you actually want to look on the platform, you can look at our quantitative statistics tool called Tip Ranks. If you look at Wetherspoons, as I did earlier before I joined this, Tip Ranks is actually ranked as a 4 out of 10 on the Smart Score. Did you see that?
Yeah.
Do you know why? Why would
Margins.
a company that's done pretty well, that is mooted to benefit from this?
It's hell bent on their margins, I think. And unless they do drop the alcohol duty, I think most pubs only make, after the cost of labour and rent, 12p per pint. And so if you think that on a drink, and you think, well, they're
What,
not
12p when they're charging, what,
Yeah.
7-8 quid a pint in the city?
Yeah, because, Wendy, who's serving it, is on minimum wage, which has gone up in line massively, right? So you've got huge cost of labour, the rent for a pub in the city, for example. Add that together, plus, all your electric costs, Sky TV, 12p. So if it's 12p for a pint, and you think they're knocking out the most coffee and food, margins on all of that must be literally like, we're talking pennies.
Razor thin.
Yeah. So if there is a big change, you'd expect to move, and if there isn't,
They've also
tricky to continue.
we've also picked up that Insider's been dumping stock So there's
really?
been £10 million worth of stocks sold in the past 3 months,
Interesting.
which is why it's been ranked back a little bit.
What,
with
just
smart
sold it in
score.
general or from inside selling?
No, insiders. So guys that are
So people that work within the business.
guys that are in there that,
Yeah.
that would be considered as an insider. Yeah.
And where's the
10 million
price
quid
these
worth
days?
of stock.
950? Something like that.
Wish I'd have looked at that before I came in. I know that Barclays reiterated their £9 buy target. I think it's 750.
Yeah.
I think it's
I was
750.
going to say, if it's had a good run, then maybe they take out pre-budget, but
Yeah.
not sure.
We'll have a little look. While Sara's quickly looking up the share price, the next thing to talk about is small cap stocks. So small cap stocks in the UK, the AIM market has been hellishly unloved since COVID. Had a cracking year in COVID. You could just look at a stock and it was moving 10, 15, 20%. There was plenty of money to be raised. There were plenty of opportunities, and we were super busy talking to market makers on clients' behalves, talking to corporate brokers, and it was a really, really busy part of the platform for us. What's the price?
720.
720. I wasn't far off.
720, but it has been up to 850, so... But yeah, steady.
750, 720. So the big part in the small cap world is inheritance tax. So did you know that if you hold a portfolio of UK small caps, currently, if you were to pass those assets on, you get it tax-free, or you get an exemption from the inheritance tax if you pass it over within 2 years.
I believe they have to be in AIM stocks. But
AIM stocks
AIM stocks,
specifically.
But
They
also
benefit from business property relief as a result.
But you also, if you hand over, I'm sure I don't know exactly what assets it is, but if you hand your assets over to your kids or whoever 7 years before you pop your clogs, obviously everyone knows when that would be.
Yeah.
If you want to get ahead of yourself, that's another way to get it.
True. They're looking
Mum,
at
if you're
changing
listening.
all of those sorts of things.
So again, we're gonna
I'm open.
we're gonna lean into the numbers here. So the Institute for Fiscal Studies in April have said that abolishing this particular inheritance tax relief is going to raise 1.1 billion in 2024 to 2025. 2025, that's 1.1 billion. Can you remember the number of total tax receipts from last year I gave you at the start of the pod?
I want to say 28.
No,
868.
No, like 830 or 840, something like
it was
that.
around 830 billion. Sorry, so we're looking at 1.1 billion. Now, I've got issue with this because Labour were brought in on a rhetoric of growth.
Yeah.
They were saying we're going to get the country growing again. We're going to not stimulate the economy, but they were certainly going to try and promote entrepreneurialism. They were going to try and reset.
Stuff,
Correct.
But they're
industry.
not. They're just shuffling money around. That's the problem. It's not creating growth.
This is exactly
You're moving A to B, but it doesn't create anything new. You need to look at, you're taxing schools instead of looking at the skills in schools, instead of looking at Switzerland and how their school system works and skills for the future. You're not looking at investments. You're looking at relief for, startups, tech companies. Look at our FTSE 100. Where are the big tech stocks? Oh, guess what? They're not here.
No, they all get bought.
Correct.
So, you talk about this government saying, oh, we want to do this, and that's it. It's just noise.
It's entirely my point. Here's a pop quiz question for you. On AIM yesterday, so granted it's a small sample size, can you name 5 of the biggest volumes? I'll rephrase my question. Which 5 stocks traded with the most volume yesterday in AIM? Go.
God knows.
I'll give you one.
Trader, go on.
Greatland Gold was top banana.
GGP.
Pantheon Resources, popular stock at the moment. Then Pan African Resources, which I think was a lithium play. I've not looked at it in a while. And then Boohoo.
Interesting.
Boohoo's up there.
You count Boohoo a small cap?
It's listed on AIM.
I think it's still AIM, yeah.
Okay.
Still at AIM.
But yeah.
So if you're going to tax those companies, the big concern that I've got as a broker, as a market participant, as someone who kind of has to talk to clients all day long, is if you're going to remove this cap, you're going to raise 1.1 billion. You're raising nothing. But what does it do in terms of harboring a growth mindset? These companies can't just go to the bank. They can't just
kill
knock on the
that
door.
market already, and that market is struggling. You can see that already. With
I was with the
that
client
you
at the
need.
weekend on Sunday. We took a client to the NFL at Tottenham, and he was saying to me, he was thinking about going again business wise, having sold business in the past. And he says, "What are the incentives for me to do it now?" He said, "There's just so much red tape to set it up." so much risk with employee and all this sort of stuff, and so many different things you got to jump through, and then all the taxation. So it's just like
crazy.
he said,
But they're a nightmare to trade as well.
Yeah, if you're trying to create a kind of entrepreneurial environment where you're trying to, like you say, create growth as opposed to just moving money around, basically, then you need to change that to make it more attractive for those things to grow.
Yeah,
they can't go to the bank. An offshore African, mining resource company that's exploring a particular area, trying to mine for lithium or all these kind of precious metals that we know that we need for the electrification of the world, that we know is going to be part of this clean energy shift. They can't go to the bank. You can't knock on the door at Santander and say, look, we need to raise 5 million quid because we're going to go and drill a hole in the ground. They won't get them anywhere. So those companies are financed by individual investors. They're fundraised through capital raisings. You need IPOs. We've got a huge private equity sector in the UK. You read various different reports about private equity, but because the macroeconomic environment for markets hasn't been very easy recently, if you look at inflation, you look at rates, how many IPOs do you remember over the last kind of 12 to 18 months that have gone well? Barely none. Very, very little. So a lot of these private equity. Raspberry Pi, actually, that's true. Raspberry Pi,
which was actually a tech innovation. One, but
we've done one.
It's not on the FTSE 100 though.
Not yet.
Oh yeah. Don't worry.
Sounds like you might have got a bit of stock, Wardy.
Yeah, I think I got the allocation. What do you get? £2,000. Everyone got like a little bit.
Little nibble.
A little nibble, yeah. A little bit of Raspberry Pi. Yeah.
Oh, don't worry, it'll get taken out soon. Don't worry. But if you think about it, there's just no IPOs. So if you're taxing those companies, they can't raise capital. It's just going to crush the AIM market as well. It's already difficult to access because spreads are 5 to 10% wide. That whole sector isn't making money at the moment. The market makers aren't really making any money. Clients aren't making any money. Fundraisers aren't getting away above anywhere near the price. They have to go to heavy discounts, and it's just awful. So I think that would signal something worse than the amount of money that they're trying to raise. But that's my beef on that one.
Yeah.
With that, I think we've been going on for a little bit of time now. Let's wrap this up. So look, to briefly recap, what have we spoken about? We've spoken quite a lot about tax. We've spoken about different names that you could trade. We've also spoken about the way that you can look at investment broker platforms, because if there's a change to the interest rates, dividend rates, you can have a look at that. Infrastructure, you can look at people like Babcock. Obviously, Wetherspoons was discussed. We didn't get time to really look at the property home builders sector, but I think that's fairly well documented. We also took a look at the North Sea, so BP, Shell, Harbour Energy. And
we also threw a little macro in there for you, little indices play
for you.
Listen, I've got to highlight one of the only things I contributed to this podcast. By the way, we have to note this is not investment advice. And if you saw my PA trading account, you would understand why that is the case. It is just purely
thoughts. Talking shop.
Which is exactly what we're here to do.
Yeah. We're just talking shop. So on the subject of talking shop, we do work for a brokerage. So we wanted to round this off with a little section that we're going to call the margin call.
Nice.
So we're going to call this the margin call. Who over the last fortnight is getting a call? Who's getting those emails where you got to close your positions down, you got a little bit of tie, you're holding an L, you need to do something about it. So at the end of all these podcasts, we're all going to pitch an idea. Who's the biggest loser in the last couple of days, last couple of weeks? So Wardy, I know you've got one. Hit me with yours.
I think it's got to be Vistry, basis yesterday's what he called jaw-dropping miss. 35% off on a stock like that is huge for miscalculation of costs on their sites. And then this sort of real quick review that they've come out with just feels like biggest loser of the week for me.
Loser of the week. Actually reminds me back when we did loser of the month. Christmas is always a time where we Christmas is a busy time of year for us. A big part of our job is we actually need to go and meet clients, and we love it, and that's part of what we do. So you can imagine Christmas is a pretty active time in terms of meeting clients. So we'd always used to run
biggest loser in January.
Loser in January. Yeah,
maybe we'll run it again.
Who could lose the most amount of weight? So some people lost some significant. Like we're talking.
There was also a bit of significant cheating of
gamesmanship,
of necking gallons of water before the first weigh in, and then grown men getting and sitting in a saunas
at 6 o'clock
in the morning
involved.
shaking.
Yeah.
Coming in, trying to sweat it all out.
I dropped more than
last minute.
10% and still didn't come in the top 5.
10%.
There was some outrageous, excess carved off. But yeah, what's your biggest L of the week, loser?
I'm going to go, look, this last week has been driven by China. Okay, everybody saw the big moves last week. But did you spot Goldman's?
Oh, yeah.
They're going to be holding an absolute bag this week. So China, they were off last week for their Golden Week. There was a load of speculation about stimulus. There were announcements. Everyone got very ahead of themselves. I think the Hang Seng was up about 40% the past couple of weeks. So Goldman's, in their great and wise wisdom, came out with a note on Monday evening. And I'll read you the title of it. China strategy, if not now, when? 10 reasons to buy Chinese equities. And they're talking about, things. I actually mentioned this on the IG TV show. I think we know where the Chinese point of absolute pain is now when they're going to step in and do something. They've used number 2, this time is different. How often do you read that and just think it just isn't going to be different? Anyway, they put this note out on Monday evening. Since Monday evening, and we're recording this on Wednesday, the A50 is down around 14%, the China A50. The Hong Kong HS50 is down a similar amount, 13.8%. And I think most Chinese listed ADRs over in the States around something similar. Your Bars, your Baidus, they're all down something pretty similar. So
what's the moral of the story?
What? Do we not listen to Goldman's?
Don't listen to analysts. Listen to the robots.
That's it, yeah.
Price action is your friend.
Price action is your friend.
So what we're saying, who's getting the margin call of the week? Is it Goldman's or is it Vistry?
It's got to be Goldman's.
It's got to be the timing of that note. It's not great. I appreciate it. Not everyone's trading on a quite so intraday, intra-week fashion, and they may well come right in the long term, but the timing of that was just awful.
Shocking. So Goldman's, you're getting a margin call. Ring, ring. Look, we're going to wrap it up there. So look, thank you very much for listening to the first episode of Talking Shop. Hopefully we have talked a significant amount of shop and given you a little bit of an insight about what it's like working on the trading desk here at IG.
I hope this gets aired.
I hope it does. I hope it gets... we come back.
I hope someone more than my mum listens to it.
Hope we come back. So without all of that,
yeah.
Goodbye.
Brilliant. Thank you.
Thanks for tuning in.
Thanks for listening.
Bye.